Hi, good week to all. This is Kelvin here again. Welcome to this weekly technical outlook of the major stock indices for the week of 11th of October to 15th of October. So I'll be covering, as usual, the key technical levels and the latest trend bias on the S&P 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 40 indexes. So before we start, let's take a look at the disclaimer slides. All right, so let's kick off with the raw momentum data, where I compare the last week performance, its prior week, the prior 4 week average, as well as to actually get a momentum, a very simple momentum between the difference of last week performance and its prior 4 week average to find out whether is there any change of what we call a very short term trend. Okay, so what we do is that we cover across the globe from US all the way to Asia, the major is Asia, and as well as in Europe, which is represented by the German 40 DAX. All right, so let's start with the US first. So we could see that US itself last week it kind of managed to actually reverse close to about 4 weeks of or 5 weeks of decline. So in fact, last week performance, right, especially on these three indices, the S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, their weekly performance is the best since they hit their respective all-time high in September for the S&P 500 and the Nasdaq 100. In mid-August, somewhere around middle of August for the Dow Jones Industrial Average. So for the small caps, it's still a bit lackluster, so it's still negative 0.38%. So that is a Russell 2000. So if you could see the Russell 2000 has been the, I would say, the underperformer among the major US indices since hitting its all-time high way much earlier in the first quarter of this year. Then thereafter, it just trade in a kind of a big sideways configuration. Then what's interesting over here is if you compare the weekly performance last week versus the prior 4 week average and get the difference, all of them are actually positive, and the amount is pretty significant. For the S&P 500, 1.8%, they're about 1.6%. For the Nasdaq 100, the Dow Jones is close to 2%, almost unchanged on the Russell 2000. So the one that is kind of underperforming in the last 3 to 4 weeks has definitely been the Hansen Index and the Hansen Tech Index. As you all know, that is pretty much triggered by this ongoing debt crisis in China property sector. Definitely the culprit over here will be Evergrande itself. So what we could see here is the short-term trend has started to reverse up to the upside on the Hansen Index. So, oops, let's go back again. So one positive last week, 1.07%, Hansen Tech 1.72%. And what we could see over here is its difference between last week performance and its prior 4 week average has starts to shape a positive difference. So that indicating a kind of a potential change in the short-term trend to the upside. 2.34% on the Hansen Index and 4%, 4.10% on the Hansen Tech Index. So in fact, this performance was the best among the major stock indices that we covered in this on the table. So what we could see over here is, yeah, the Nikkei 225 underperformed, but one thing positive is later I'll share it on the chart, the performance or the last week decline actually stopped at a very key long-term pivotal support level. So, and also if you look at last week performance, 2.51%, it's slightly almost half of the prior week negative return, which is negative 4.9%. So definitely wise in terms of change in the short-term trend, hasn't really much evidence yet at negative 2.26% for the difference. So for the German 30 index, also start to see some signs of short-term potential change of a reversal, potentially 1.3% if you take into the last week performance versus the prior 4 week average. All right. So all in all, what you could see is this table indicating to us that there's some sign of short-term upside momentum that is creeping back into the major stock indices. All right. So if you could recall last week, I did send out an update on the S&P 500 and the Nasdaq 100 on Thursday, indicating to us that potentially that residual push down on the major stock on this S&P 500 and Nasdaq 100 is more or less over. Still recall that last week we are actually emphasizing that 4 week plus of decline is coming to a very tail end where we could see a potential impulsive up move from here. That means, i.e., to start to see a structure of higher high and higher low, and potentially could take us to a fresh all-time high as well. So later I'll cover more on details on the chart on the S&P 500 and the Nasdaq 100. So let's take a look at last week performance on the US sectors, the 11 sectors within the S&P 500 index. So out of 11 sectors, not too bad. I would say that 8 out of 10 in green. So definitely we've been highlighting is sectors that are kind of have a direct correlation with the rising US 10-year Treasury yield, which is actually being kind of supported by this global inflationary pressure. To me, it's more of a stack inflationary pressure. Instead, so those who want to find out my opinion piece could actually read out last week. I also posted on my Twitter handle as well. So on this particular correlation between the rising US Treasury yield and with the various 11 sectors. So later I'll try to find, later I will just show you where to find all my stuff. Okay, so I actually posted all my stuff on this Twitter, which is my social media, almost every day. Okay, so you can get an update of what's going on in the market and what's my view on certain key aspect of the market that we should be taking note of in the near future. So definitely the one that is higher sensitive has higher sensitivity to a rising U.S. Treasury yield, the longer dated one, is definitely the energy sector, which is up 5%. Last week, definitely totally surpassed the S&P 500 index. The financials are up 2.26%, industrial 1.77%. So do take a look of financials. Later I'll share your table. US earnings season starts to kickstart this week with the major US financial and banks. So later I'll share your who are reporting and on which date. What's interesting over here is despite we start to see energy stocks or the energy sector has been picking up much steam lately in the last 3 to 4 weeks. The S&P 500 didn't move much. Why? Because the energy sector only comprises less than 5%. In fact, only 2% plus on the S&P index. So whatever movement that they move significantly, it will be pretty much negligible in the S&P 500 index. But so definitely for those guys who want to seek what we call outperformance of the index, this could be a particular sector that you could actually pay attention to. All right. So now this will be the upcoming key economic data releases first for this week. So this week will be more like an inflationary week data. So definitely is that inflation will be a cornerstone in almost all traders and investor mind right now. Why? Because if you look at the current energy prices that is going up in the last 3 to 4 weeks, driven by all sorts of factors. Okay, number one, first factor will be this net gas price that's going up due to a lack of infrastructure of clean energy, which is net gas is one of the cleaner energy. It eventually drive up coal and drive up oil. Why? Because at the end of the day, coal and oil are actually substitute energy resource energy resources for net gas. And as you know that right now we are approaching the winter months with the lack of supply for net gas, especially for countries that actually require more heating, to actually warm themselves, especially in Europe and even in China, it could actually further exacerbate the inflation numbers ahead. So this is a cost number to watch out for, and definitely in China as well. As you all know that China inflationary rate and PPI, especially the factory gate costs, they are actually going up close to 2008 high. Okay, especially on the producer price index, which is out on Thursday. So in fact, if you look at some of us may actually agree that what the current situation, the current inflationary pressure right now is actually coming out from China because due to the factory gate prices. So yeah, that could actually be a little bit of debate, but definitely the numbers are actually important to focus on for this week itself. Then you have the US PPI. Then definitely for economic growth, you have the retail sales, which is out on Friday, US one. 8:30 p.m. All this time are in Singapore time, and definitely consumer sentiment. Because if you look at retail sales represent consumer spending, consumer sentiment indirectly will actually flow into consumer spending sooner or later. It's a form of a leading factor. And also, if you look at US, the economic growth is close to two-thirds is actually driven by the consumers. All right. So why is it important? Because the consumer sentiment data has been relatively weak in the last 3 months. And that actually supports our view of this peak growth narrative, which eventually tell us that we are actually in a state of stagflation potentially rather than reflationary environment that we start to see in the first quarter of this year. All right, despite this rising U.S. Treasury yield. Then now, like I mentioned earlier, that this is week will be the kickstart of the U.S. Q3 earnings season, where the banks will actually take the forefront for this week. The U.S. financials, I would say, I like to refer to financials rather than banks, because some of them are not really banks itself. Some of them are actually involved in investment, and we call it ETF, exchange traded fund, which is financials. So I'll use the term major U.S. financials instead of banks. So we have BlackRock, the kickstart on Wednesday, or before the U.S. market opened. So talk about Singapore time between 7 to 8 p.m. depending on which company you look at. So on Wednesday, BlackRock and JP Morgan. Thursday, Bank of America, Citigroup, as well as Morgan Stanley. And lastly on Thursday, we've got Wells Fargo. So Thursday will be a pretty much heavy week where we start to see the bulk of it releasing on that day. Then to close up for the week will be on Friday, Goldman Sachs. Okay, and Charles Schwab will be pretty much interesting to see how's the we call it the trading volume like for the US retailers, all right, retail traders, as I say. So good. Okay, so with that in mind over here is that let's quickly go on to the trend bias, the latest trend bias that I have for you all for this week potentially, which is what I call it the multi-week strategy. Okay, so let me quickly go to the chart. Okay, so let us start with the US indices first. All right, so okay, so let me jump into the US indices. So what we could see over here is this is the daily chart of the SPX 500, the SPX 500. So what we could see over here is that, yeah, last week push down over here actually stopped close to the 423 level, okay, which we highlighted earlier on. This is the level where we expect a bit of residual push down before it indeed actually shape a bounce towards the Tuesday from Wednesday onwards, okay. And what's interesting, the RSI also starts to actually form a potential base as well. Okay, a potential basing formation right at the key support at 44 level, which managed to help actually previous corrective decline over here. Okay, during this period in time. So what we could see over here is this is what I call a potential wave 4, a very similar corrective wave. We call it a zigzag, ABC zigzag, rather than a flattish configuration that was recorded last September and October. So in terms of magnitude rise, it's also pretty much similar. So if you were to look at the magnitude of the decline in the previous 4 week plus of decline is about 9.9%. So what we have over here from its all-time high all the way down to this low, okay, slightly lesser, 6.6% plus, okay, 6% plus. So what we could see over here is that this corrective decline over here, based on what the RSI is actually showing, the basing formation of the RSI, and also the Fibo structure itself. So if we were to draw the Fibo analysis, the Fibo structure, if you do the retracement from the start of the wave 2 towards the end of the wave 3, so it gives us 23.6%, which is the minimum target of a potential corrective wave 4, okay, based on that Elliott wave theory. Okay, let me remove this off. Okay, so what's in store right now over here is could be a potential reversal to the upside over here. So what we have last week over here is that we sent an update on Thursday indicating to us this could be the potential low of that wave 4. That means, i.e., this corrective down move is more or less over. So if you were to draw the Fibo projection from the top, from the start of the move from the all-time high, A, B, C. You see over here is 0.674. At one time it's at 42.30. So definitely I will actually still use 42.30 as my pivotal support level. So this is the key support level to actually state. So pivotal support is something like a make or break level, okay, in my way of doing analysis, okay. So it's different from the what I call the statistical pivotal that you use. So pivotal for my style analysis is a make or break level. That means right now I do have a potential bullish bias. So as long as 4230 holds, because this is a key support level, that's why it's a pivotal support level. If we do not have a daily close below this level, our preferred bullish bias still remains intact. Okay, towards 4640/50. then thereafter 45.20 slash 540, which is the current all-time high. Okay, so what we are seeing now based on the Elliott wave and the factor analysis, this will be the potential start of the impulsive wave one of a bigger wave five. So wave five, is equals to the tail end. So after potentially we reach bracket five, this is where we got to be more cautious. Potentially, there's a risk where we may start to do a bigger retracement of the this entire major up move that is that is still in place since March to 2020 low this year. Or on the other hand, a bigger risk is a bigger retracement of this entire long-term structure uptrend that is in place since 13 years ago, which is from March 2009. Okay, so there's these two factors that we're going to watch. Which particular factor will come into place right now? I would say both of them has equal probability, 50-50. And this probably will start to get clearer as the price approaches 46.30, which is the next major level that I highlighted earlier on my Q3 outlook. Okay, so that's the top-down analysis I do for you all earlier on. Okay, so now the focus for this week will be the key support will be 42.30. So however, a daily close below this level will actually invalidate this move. These bullish buyers will start to see an extension of this 4-week plus of corrective decline to test 41.40, which is the 200-day moving average. And one of the element that is positive in the shorter is due to this bullish divergence that was seen on the 4-hour RSI, where we start to see a series of higher low where price starts to instead trace lower low. So indicating to us that the downside momentum in the last 3 to 4 weeks has kind of subsided. Okay, now moving on to the Nasdaq 100. Okay, the Nasdaq 100. So similar for the Nasdaq 100 as well. 14,480 slash 14,320 hit exactly at that level before it shaped a bounce, and not so clear like a basing formation on the RSI, but the RSI actually managed to come close on the oversold level. Okay, so indicating to us at least there is still potential form of what I call an overstretched decline where we could be due for at least a rebound that is taking shape from here. Okay, so now going to the strategy chart that we have, the 4-hour chart. So what we could see now over here is we have 14,320. So that is my big make or break level to maintain this bullish bias view. So as long as this level holds, no daily close below it, below 14,320, we are actually expecting potentially a push to 15,100 slash 15,200. A break above should take us up to this congestion zone here that was formed earlier on 14th of September and 27th of September, which is 15,350 in the first step. So however, a daily close below 14,320 should invalidate this bullish bias to extend this down move towards 14,040. So what's 14,040? Still recall 14,040 was actually previously the major range resistance, or I would say the medium term range resistance for 15th of Feb all the way down to 23rd of April. That was actually taken out earlier this year, which is on the 16th of June. Okay, and also the 200-day moving average. Okay, this 14,040 level. Okay, now moving on next to the Hansen Index or the Hong Kong 50, we call it our platform. Still recall that Hong Kong 50 last week we were actually hesitant to turn outright bearish. Why? Because of the push down here, despite a lot of negative news in this evergreen thing that's still playing on the market, because it's actually right at this long-term circular ascending trend line that has managed to keep previous steep decline in place since the great financial crisis, which is the low of October 2008. Okay, it's been supported by this line. So it actually tested again on 3 to 4 weeks, 3 weeks ago at 24,400. At 24,000. Okay, pardon me, 24,000. So what we could see over here is this. Last week, we actually turned neutral between 23,000, or 2 weeks ago, we kind of maintained this neutrality stance between 23,500. The upper boundary is 24,750. So today, it actually broken out above 24,740. So actually, I could validate at least a push up over here within this kind of a descending expanding wedge range configuration that is in place since its 52-week high, which is the 18th of Feb high. Okay, so I could actually play this potential tactical bounce provided that 23,500 holds from here. So what you could see is that the first level to watch on the resistance will be 25,600. Then thereafter followed by this range stop over here. This significant range stop at 26,750 slash 27,000. So, but if we have a daily close below 23,500, then all bets are off. Then we will start to see another round of decline to actually target the next support at 22,090 slash 21,755. Okay, then moving on next to the Nikkei 225 or the Japan 225 that we have here. Okay, so if we go to the Nikkei 225, okay, so for Nikkei 225, what we have over here is, you'll notice that we have this 27,500 slash 26,680. So this is a major support level. Why major? If we could recall, this is the daily chart. You go to the weekly chart. So this is my long-term pivot support level. So it was actually tested during the fall, during this decline from its 13-year high of 21st of February, tested on the 15th of August, tested on the 18th of July, and tested again last week at 26th of September. Okay, that week last week. So it's 26,880. So that is a pretty much key, indeed a key pivotal level on a weekly basis. That means why I say that as long as we don't have a weekly close below 26,880, because this is a weekly pivot derived from the weekly chart over here, we could still potentially see further potential upside towards this level over here, 35,500, 34,000. Definitely a break above 30,490. Okay, so that's from a multi. This is a weekly chart, so it's a quarterly outlook. So what we have for a lower time frame outlook, that means we're talking about a multi-week strategy. We got to actually scale down much lower in terms of time frame. That means just looking at the daily chart and the 4-hour chart element, but respecting the longer term levels that was actually derived on the weekly chart, which is the keys of long-term support at 26,880. So what we could see over here is last week it actually did a bit of reintegration of this pullback line. This was a pullback resistance break, then reintegrate and reverse again. But where it stopped over here, it actually stopped right above the 26,880. So this is indeed a key support level. Definitely we want to actually highlight for this week over here. So what we could see is that, and the daily RSI also start to shape a bounce right at a key support level that we can draw from the kind of extreme oversold levels from 16th of March 2020. So that was the pandemic low. Connect to this point, the previous 7th of July low, and connect to this point last week low. So it managed to shape a bounce from a key, we call it corresponding ascending support and the oversold level. So what it means that it's here indicating to us that there's some form of medium-term upside momentum potentially has started to resurface into this Japan 225 index. So i.e. what we could see is that upside momentum right now is actually bouncing, resurfacing after hitting a kind of a key support level and oversold region, which actually support a potential recovery scenario from the previous 4-week plus of decline since 14th of September high at this juncture. So for the strategy chart, yes, last week we have a kind of very tight pivotal support at a slightly higher level, which is the 28-figure level, broke through. So, but never break below and hit the alternative target. So the alternative target that we have was 26,880, which is the key pivotal support. So this key pivotal support long term now is also my medium term pivotal support I have for this week, 26,880. So because given it's derived of the weekly chart, to maintain our quarterly outlook. So as long as a weekly close, it did have a weekly close below 26,880, we kind of still expecting at least a push up in first step towards the intermediate resistance range of 29,200 slash 450, okay, which is this congestion zone over here from 21st of September to 28th of August, as well as this last minor swing high of 4th of October, and as well as this current descending trendline resistance that is linking the current lower highs that was formed on the 14th of September and 27th of September. So there's three factors or three elements that's confluencing at this level. So I will not be so aggressive to actually anticipate a bullish breakout from here yet. So taking things one step at a time first. Okay, to actually look out for a first potential push to test this zone 29,200 slash 450. So if we have a kind of a weekly close below 26,880, then all bets are off. We start to see number one, the longer term bullish outlook also has been invalidated because 2680 is a long-term pivotal support level derived from the weekly chart. This is where we may start to potentially see a risk of longer, a bigger magnitude of retracement to actually retrace or corrective decline to retrace the entire major uptrend in place since March 2020 low. Okay, so the next support level to watch after 2680 will be 26200 or 26,220 followed by 25,900. Okay, moving to the German 40 index, the DAX. So we could recall that the DAX last week we actually also expect a residual push down to test 14,480 slash 14,750, which is the 200-day moving average. It indeed tested and did and shaped a bounce from here, from there, as you could see over here. So that is indeed a key support level which we highlighted earlier on. And also the RSI managed to actually shape a bounce off from the this oversold region. And what's interesting on the RSI over here is if you could see here, the it start price action show a lower low, okay, lower low, but RSI now is actually shaping a higher high, higher low. Pardon me, not higher high, higher low. Okay, this is the higher low. Okay, so what we could see now is that the daily itself, about a bullish divergence that is formed of the oversold region. Okay, so indicating to us that this particular down move here is kind of number one, overstretch and downside momentum has really started to ease off, which actually support at least a tactical bounce in first step from here. All right, or for the German 30 or German 40 index. Okay, so now the strategy we have for last week, right? Still no change. So you recall last week we expect a residual push down to actually come close to 14,740, which indeed hold true. Okay, 14,740. So still using 14,740 as my key medium-term pivotal support we set for this week. So looking for the further bounce potentially towards 15,450. A break above should target this congestion range resistance over here from 14th of September all the way up to 27th of September, which is at 15,720. So if we have a daily close below 14,750, all bets are off on a bullish bias scenario where we start to see this 4 week plus of close to 6 weeks plus, okay, of this extension, this corrective decline extension to actually target the next support at the psychological level at 14,100 level. Okay, so with that in mind over here is that what we highlighted is that we start to see a more potential bullish bias picture on the major stock indices where the S&P 500, the Nasdaq 100, the Nikkei 225, as well as the German 40 has more or less completed their 4 or 5 week plus or 6 week plus of corrective decline phases, where potentially we may now start to see the start of a potential impulsive wave structure. Okay, as long as the respective highlighted medium-term pivotal support holds for this week. So with that, before we go, let me share with you how to find my market update, which I tweet very occasionally on the social media. It's on my Twitter handle. So you can actually follow me. Just open a Twitter account. Just go to Twitter, www.twitter.com. Open an account is free. Register for it. And once you open an account, just search for me at Kelvin SC Wong. Okay, at Kelvin SC Wong. So once you find me, you just follow me. Just on there's a notification to actually on the notification. So this notification, as long as I tweak any stuff, which I did today. So this is my morning brief that I have. Okay, so usually I will tweak. So this is the kind of morning brief that I tweet every morning over here to highlight what are the key news and update and outlook as well. So later this video I'll actually post into my Twitter handle as well. So if you're on the notification by following me, you'll be able to know when my latest update on the market that is being published on Twitter. Okay, so with that, have a great trading week ahead, and I hope to see you all again in my next webinar. All right, thank you.